Hi, you're watching Bloomberg Quint Live, and I have with me Steve Pagliuca of Bain Capital to talk us through what the global economic outlook is and what that means for the world of investing. Steve, thank you so much for speaking with us here in Davos.
Great to be here.
So everybody seems a little bit more gloomier about the kind of growth outlook that we have for the world this year. Is that, in a sense, good news that we might see asset prices decline a little bit across the world and make it that much more interesting for investors like you to put money to work?
Well, we've seen a pullback in the stock markets, and the U.S. market went down about 20%, and it's kind of gone back up. Maybe it's down 10% now. But still, even with that, multiples are in the top quartile of what they've been over the last 20 years. So I would say it's still a reasonably frothy environment, especially given some exogenous risks, like what happens with Brexit, people are talking about here, what happens with the trade war, which people are also talking about here. And finally, which they're not talking as much about, but I think is important, kind of the governmental budget deficits across the world. The United States, for example, is running at $700 billion negative in terms of the deficit, and we already have a $22 trillion national debt. So that's a third concern. So I would say our watchword is kind of be selective, proceed with caution. You want to make sure if you're investing in a business that you're not investing at the top of the cycle where the multiple is the highest it will be, and the multiple will come down when you decide to take the company public or look for liquidity. So you have to be very cautious in this environment.
Right. Considering that there's growth in Europe is under pressure, growth in the U.S. is under pressure somewhat, but it still is considerably strong.
The indicators are very good in the U.S. They really haven't fallen down. Employment is a record high, consumer spending is high. India is a bright spot. India continues to have growth rates in excess of 7%. They've been a little immune from this and actually benefited by lower oil prices.
But it's also a politically active year in India. So, if you look at the mix of factors, slightly moderating growth, geopolitics, Europe is going to see parliamentary elections. In Britain, you're going to see Brexit. In the US, we have a government in shutdown for the longest ever. In India, you're going to see national elections take place. So is this a year that you'd just rather stay a little bit on the sidelines in some of your key markets?
Yeah, I don't think we stay on the sidelines because we just have to be selective and look for companies that we can transform and grow. And though there's still opportunities out there, there's still companies that can take share, there's companies that can introduce new products. So I think it wouldn't be a great year for kind of buying a plain vanilla company, but buying a company that you can transform, that's what we try to do at Bain Capital.
Okay, you've been a long investor in India, and I think put considerable money to work. 3.5 billion, if I'm correct, in the last, somewhere there. And some of your marquee investments have been in the financial services space. You're on the board of Axis Bank. We've seen a tumultuous year when it comes to financial services last year. Some of India's leading banks faced governance issues. Axis was one of them. And then we saw this big, sort of crisis of sorts take place in the non-banking financial sector. You have a big investment there in L&T. So what do you make of what's happened with financial services in India and what the next few years hold?
Well, I actually say directionally financial services has gone in the right direction. The RBI has come in and are regulating banks. They're trying to make sure that their credits are good. We think we've come in at an opportune time to recapitalize Axis Bank, which has a fantastic management team and fantastic brand in India. And when you step back, very good banks in India are growing quickly. The market needs more credit, and so we think it's a wonderful opportunity at this time.
And you believe that because we've seen most of the major banks pull back in terms of being able to grow their loan book substantially. If they are growing, it's more towards the retail end of the market and not as much to corporate or project finance. How do you see that pan out over the next 2, 3, 4 years?
Well, our view is that there was a pullback, and some banks need to be recapitalized. And the group we brought in put $1.8 billion into Axis Bank. Banks have aggressively written down their loan portfolios. The new regulations in terms of bankruptcy, I think, has helped. There's been, I think, 30 billion of credits already taken care of out of the system. And so we really are, I think, ahead of a trend of having the banking system stabilize with the work that they've done. And fundamentally, a market growing 7.5% is going to need corporate lending. It's going to need retail help. It's going to need small business lending. And a bank like Axis and many others are well positioned to do that.
Okay. Besides that, what else looks interesting to you in India, given the politics of the day?
Yeah, everything is situational. So it is it's interesting. It's really an equation. It's how much do you have to pay to buy a growing company. So financial services is still interesting. The whole services business in general. Healthcare is another area that's of high interest. And we also have a joint venture with Ajay Piramal, Bain Capital, that's looking at distressed debt that's coming out because of the new bankruptcy rules. So those are kind of exciting areas to invest in India.
Yeah, but do you see you doubling down on investments in India over the next 2 to 4 years? Because it's part of the Bain strategy, but you have been slow in identifying what you want to be invested in, and you haven't topped that up with too much in the last few years.
Actually, we've invested a lot in the last few years. The billion in Access.
Access, yes. L&T, yes.
L&T. So but we think that's a very prudent way to go. And I don't say we'd ever double down on anything. What we do is we look opportunistically and strategically at all regions of the world. And so it doesn't really matter what's happening in the market. It's what is the specific deal and how can that company perform. And we found plenty of those in India, and we're staffed up to do that. And I think becoming more well-known and solid there, and the performance companies have been great. So we're excited about investing, but it's not about doubling down. It's about appropriately investing money that we think we can really help companies with.
Okay, and healthcare looks like the next best promising spot for you?
Healthcare looks interesting, and services, financial services, those kinds of things.
So should we expect bigger investments? Because one of the things I keep talking to your India team about is that you all do very select large investments, and we haven't seen, I think, the numbers in terms of investments grow dramatically. Even on the credit side, for instance, KKR has built a very large book on the credit side, but Bain has been a lot more conservative and cautious in being able to do that. So I was just curious to know what the India strategy will be over the next 2 to 5 years.
The India strategy is no different than our global strategy. Our funds are large, but always a bit smaller than the KKRs or the Blackstones. We really like to never have a situation where we feel like we have to invest capital, because as the world is a complicated place and there are cycles in many places. So we're very comfortable with our investment rate. Our investment rate is just about what we anticipated it to be. And so we have no concern with that. We're looking for quality investments and quality companies, and it may not look as sexy as putting lots of money to work, but we want to never have that pressure. And our goal is building great companies, and then that what comes from that is greater returns for investors.
Okay, and you believe that since you sit on the board of Access, I'll ask you this question, that whatever disturbance we saw as a result of having to change leadership at Access is now well behind Access, and that the next few years will bring years of repair, not just to the balance sheet, but also to governance and board structures?
Well, I would say the balance sheet is strong, and Shikha Sharma did a fantastic job of bringing Access to where it was, and retired, I think, leaving a very strong bank. We're very confident in the current management team. Amitabh Chaudhry has a fantastic record in India, and I've been excited being involved in Mumbai, I think 7 times in the last year or so. Mumbai is obviously an exciting place, a lot going on. I hope they get the subway completed pretty soon.
So do we.
It's caused a lot of traffic outside.
Yeah, I know.
Outside
so do we.
That'll be amazing when you have that subway in there. But we're very confident in the management team and the strategy and the bank itself. And I think India has a lot of advantages for so many smart people, the technology, speaking English. So I think India can really capitalize on that and continue to grow.
All right, Steve, we'll leave it there. Thank you so much for your time.
It's been great to be
and
here.
And enjoy the rest of Davos.
Okay,
Thank
too.
you.